In this S&P 500 weekly technical analysis, I will answer to this most important question, that even when there is very heavy pressure on the entire US stock market, then why the S&P 500 is not failing. And this question becomes more relevant because now the trend is changing and there is no new expected all-time high level. Rather, S&P 500 in the coming weeks is more inclined towards the 7,000 psychological mark. Now the answer to this question, why the S&P 500 is not failing even when there is heavy pressure, and the answer is the trend line. And not just the trend line, but the level that is creating a zone along with the trend line. My level is in the 736X, whereas the trend line level on 23rd of July was 7376. And both of these have created a very strong support, a very strong cushion for the S&P 500. This is why we have seen an intraday reversal, because we knew that there will be the reversal. This is why I mentioned here that no matter what, the 736X/7X, this zone which is created by the trendline level and my calculated level, will work as a strong support to the S&P 500 in the bearish side, and the bearish side is now restricted to this level, and even if there comes any breach of this, the level or the zone, then also it will be recovered. And then the same was repeated for Friday, that no matter what, the zone here along with the trend line will be able to hold the fall, will provide a strong cushion to the S&P 500. This was the first reason why the S&P 500 is not failing. Now the second reason. The second reason was that I use a method to find the daily opportunities in the premium stocks and the ETFs and the index, like where to buy and where to sell. So when I apply the same method, then it was clear that this zone at 736X/7X created by my calculated level and the trendline level is exactly at that point from where my method indicates a reversal in the S&P 500, a buy level or a buy opportunity in the S&P 500. And now the point number 3, why the S&P 500 is not failing, is because on the lower level charts, S&P 500 hit the saturation and the oversold condition. So combining 1, 2 and 3, S&P 500 sustained on Thursday 23rd of July and then sustained on Friday 24th of July. And there was 1% recovery from the low on Thursday to the high on Friday, because there was a buy opportunity in the S&P 500. Now if the S&P 500 is not failing, then why the S&P 500 is failing to move up? Why it is not going bullish? The reason is the 7,404X level. Because the S&P 500 lost this level on Thursday and there were continuous hourly closings below this level, this means that any bullish side movement will be limited and restricted to the 7,404X, whereas the bearish side will remain open to the 7,306X, or the zone created by my level and the trendline level. And exactly the same was mentioned on Friday when S&P 500 moved up sharply above the 7,404X, that even though it has gained the 7,404X level, but the bullish side movement will still remain limited, restricted, with the chances of the fall back to the 7,400 psychological mark. And we have seen that S&P 500 retraced and came down and lost the 7,400 in the second half on Friday. And why the 7,404X level becomes so important? So the reason is that earlier S&P 500 was getting strong support at the same, and because of that there was back to back, there was again and again bullish movement, because S&P 500 was holding and giving daily closings above the 7,404X level. This is why if you notice from Monday onwards, I have started to mention the 7,404X, that as long as the S&P 500 is holding, sustaining and closing above the 7,404X, it will remain bullish no matter what, and will try for the 7,500 psychological mark. So now it is clear that why the S&P 500 is not failing, but at the same time is failing to move up. Then why the trend change? Because now there is a very strong possibility of a bearish crossover in the moving averages, which was not there earlier in the month of June. And because now the S&P 500 will lose its energy to save itself or to defend the trend, this is why for now we are not expecting a new ATH. Rather, because of the pressure through the weekly chart, we are expecting in the near terms, in the coming weeks, the 7,000, the movement of the S&P 500 towards the 7,000. Now there will be only one exception that can save and the S&P 500 itself, and that can disallow all of this the change. That will be the formation of the bullish slip. So how the bullish slip will work, what are the chances that the bullish slip will form, and if all goes well, then how much the S&P 500 can move into the bull side. Otherwise, once there comes a bearish breakout, then how much S&P 500 is going to lose. All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of July 27th, means from July 27th, which is Monday, to July 31st, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First part is the technical part. I will discuss all of these moving averages, bearish crossover, and the MACD, etc. All of the technical factors to deduce the long-term trend and the short-term trend. And through this, I will show you how the S&P 500 is changing its trend from bullish to bearish. Second part is the probable movement. Probable movement means what is expected to happen in the S&P 500, or how the S&P 500 is expected to move in the next week. What will be the bullish condition, what will be the bearish condition, bullish, bearish levels, zones, and all of that in this the probable movement section. So guys, it is recommended that you should watch both of these sections, technical part and the probable movement, in order to understand how the S&P 500 and the entire US stock market is expected to behave or move in the coming week, in the week of July 27th. So guys, first I am going to start with the technical part. So guys, now I am going to start with the technical part, the first point of the agenda. And the technical part is divided into the weekly chart and the daily chart. Weekly chart means the long-term picture, the long-term trend. Daily chart means the short-term picture, the short-term trend. So I'm going to start with the weekly chart. So let's first deduce the long-term trend. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now if you notice, this last weekly candle of the S&P 500, it's a good bearish candle. The most important part of the candle is the closing, because the closing is below the previous closing, even when the open of the S&P 500 was above the previous candle's closing. This indicates heavy pressure and the bearishness in the S&P 500. Furthermore, the candle managed to sustain at the moving average. This means that the candle is not indicating a gap down open, rather the candle is indicating an initial or intraday bearish movement on Monday. Now this is the last weekly candle of the Dow Jones. If you notice here, this is more tricky because the open was just around the closing of the previous weekly candle, and the closing is below the previous candle, previous weekly candle. Further, closing is below the low of the previous candle, is indicating that Dow Jones is more bearish as compared to the S&P 500. Okay, but still, because there was very heavy retrace, there is a very good wick of the candle. This is why no gap down open, just an initial or intraday bearish movement on Monday. And this bearishness is more clear in the Dow Jones, because if you notice, there is the moving average, the red moving average, and the Dow Jones is more inclined to come down towards this red moving average. But basically it will be coming down towards the 51,000 psychological mark. As of now, it is at, the Dow Jones is at 51,047, means 2% fall in the Dow Jones. 1.5 to 2% fall in the Dow Jones is expected. So overall, the candles are indicating an initial or intraday bearish movement on Monday, and also weakness for the entire week, weakness and the bearishness, right? Now, let's analyze the technical indicators and deduce the trend, the long-term trend. But guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, as well as opportunities in the premium stocks, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's analyze the technicals. Technically, the S&P 500 is still holding bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the weekly chart. And the S&P 500 is now finally, there is the bearish crossover in the MACD of the S&P 500. Now, remember, if you have subscribed to my YouTube channel for last many months or years, okay, I've shown you the importance of the MACD, because MACD gives a linear movement. For example, there was the bearish crossover in November 2025. This bearish crossover was there until April 2026, okay, for almost for 4 or 5 months, right? then the bullish crossover from April 2026 to July 2026, again almost 4 months. Okay, and now finally there is the bearish crossover in the MACD, confirmed bearish crossover, right? This means that now the trend is changing. Okay, furthermore, only a very heavy bullish movement in the next week, a very heavy bullish candle, you can say like more than 2 or 2.5%, means very near to the 7,600, this candle, or a new all-time high, can force the MACD of the S&P 500 to change its direction. Otherwise this is impossible, because on the weekly chart the calculations are very complex for the MACD. This is why like 1% or 1.5% or even 2% bullish movement, this will not be able to force the change in the MACD. And once the MACD has changed, this is now a good or an early indication that the long-term trend is changing. Okay, so the MACD is bearish, and furthermore stochastic RSI is bearish. This means that now there is bearish momentum in the stock market. This means that now whenever there will be any confusion, whenever the stock market or the S&P 500 will be looking for the direction, then by default that direction will be bearish, because the momentum is bearish. That will be the default direction whenever there will be the confusion. Okay, so now S&P 500, there is no saturation, no overbought, no oversold condition. So finally the S&P 500 is 60% bullish. There is still the long-term bullish trend, but now that the long-term bullish trend is coming under pressure, and this trend is changing as confirmed by the MACD and the stochastic RSI on the weekly chart. If there comes one closing below this red moving average, one weekly closing, means if in the next week the S&P 500 closes below the 7,300 approx, you can say like 7,360, okay, or 7,370 or so. Okay, in that case the S&P 500 will turn neutral, from bullish to neutral, and then it will be heavily aligned to the bearish side. And then in the coming weeks we will see that now there is heavy fall. S&P 500 is moving to, or has actually come down to, the 7,000 psychological mark, which it has not since since March or April 2026. Okay, when the war started, and after the war, when there was a ceasefire announced, back-to-back comments from the president and some heavy manipulation. Okay, so this is the long-term picture. It is the S&P 500 is 60% bullish on the weekly chart. Now comes the Dow Jones. Well, Dow Jones is also bullish through the Bollinger Bands, Ichimoku cloud moving averages on the weekly chart, and the Dow Jones is okay. Dow Jones is in a strong condition, because MACD of the Dow Jones is still holding bullish. This is a relief, or a big relief, to the S&P 500, to the Nasdaq, to the entire US stock market. Why? Because Dow Jones is the prime index to the US stock market. Okay, and as long as Dow Jones is, the MACD of the Dow Jones is trading bullish. Okay, there is no fear. No fear means there is no fear of like heavy fall to the 7,000 or back-to-back heavy fall in the S&P 500 or in the entire stock market, because once there comes a successful bearish crossover in the MACD of the Dow Jones, then there will be heavy fall, and then no one, even the manipulators, will not be able to stop the fall. S&P 500 will then re-enter into the 6,000 range, and it will lose the 7,000 psychological mark. So in this manner, the Dow Jones is still holding, and the Dow Jones is still 80% bullish. Okay, S&P 500 is 60% bullish on the weekly chart. Dow Jones is 80% bullish on the weekly chart. Long-term trend is still bullish. There is good or heavy weakness in the S&P 500, but that weakness is not seen in the Dow Jones. Now, how soon there will be the fall, or what can trigger this heavy fall in the Dow Jones and can force the MACD of the Dow Jones to turn bearish? So this will be more clear on the daily chart, because daily chart is the short-term picture. So now let's move on to the daily charts. So guys, now we are here, and this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay, now let's first analyze the candle. The candle is very weak bullish candle, because there is very heavy wick, and the open and the closing of the candle are below the 50% of the candle itself. Okay, so heavy weakness. indicating an initial or intraday bearish movement, but not a gap down open. Okay. Now the Dow Jones. This is the daily chart of the Dow Jones, the last daily candle of the Dow Jones. Now, if you notice, the candle is normal bullish. Okay, it failed to close above the moving averages, but still the open and the closing of the candle the Dow Jones candle, okay, are above the open and closing of the previous candle, indicating some bullishness. This means that an initial or intraday bullish movement on Monday in the Dow Jones. Okay, and this is very, very surprising, because on the weekly chart we have seen weekly chart of the Dow Jones and S&P 500 are indicating an initial or intraday bearish movement. Secondly, the daily chart of the S&P 500 is also indicating bearish movement on Monday. Okay, the only exception is here the daily chart of the Dow Jones, which is indicating an initial or intraday bullish movement. So all of this indicates that no matter what, there will be the pressure on the S&P 500, Dow Jones, and on the entire US stock market on Monday, and in the next week, the week of July 27th. Okay, but to counter this pressure, the Dow Jones will come to help, and the Dow Jones will provide some help. Means there is the trend line in the S&P 500. This trend line is holding the fall in the S&P 500. Now this trend line, the S&P 500 is getting the support of the trend line and will also get the support of the Dow Jones. Okay, only when there comes heavy fall, the Dow Jones, the S&P 500 gives continuous hourly closings below the 7,400 psychological mark. It will be the support. See, this support of the Dow Jones is normal, or is little. It is not heavy that this support of the Dow Jones can push the S&P 500 heavily in the bull side. It is not that heavy. Okay, only under normal circumstances, when the S&P 500 is trying to move up, the Dow Jones is trying to move up, and then it needs some help, then only the Dow Jones, the candle of the Dow Jones will help. That is the only thing. Okay, now how much help will be there? Okay, this will be more clear through the technicals of both the S&P 500 and the Dow Jones. So let's analyze the technicals. But guys, yes, before that, so far if you have liked this video, then please hit like to appreciate, and also please hit the hype button on YouTube to support and to show your appreciation, and your appreciation matters a lot. Now, technically, the S&P 500 is bearish through the Bollinger Bands, and is neutral through the moving averages, and is neutral through the Ichimoku cloud on the daily chart, and the S&P 500 is bearish through the MACD, bearish through the stochastic RSI on the daily chart. No saturation, no overbought, no oversold condition. In this manner, the S&P 500 is bearish. The S&P 500 is 60% bearish on the daily chart. So finally, after many days, okay, the S&P 500 has turned bearish, and it is 60% bearish. Okay, furthermore, this time this change is more real as compared to what we have seen earlier, because last time when this change was happening, that time the S&P 500 did not close within the boundary of the Ichimoku cloud. This is the Ichimoku cloud. Okay, there was no closing, but now there are two consecutive closings, daily closings within the Ichimoku cloud. Now comes the Dow Jones. Well, Dow Jones is also bearish through the Bollinger Bands on the daily chart, neutral through the moving averages on the daily chart, but is still bullish through the Ichimoku cloud on the daily chart. And the Dow Jones is bearish through the bearish through the MACD and the stochastic RSI on the daily chart. No saturation, no overbought, no oversold. So in this manner, the Dow Jones will be considered as neutral. The Dow Jones will be considered as neutral, not bearish, not bullish. Okay, and because the movement of the Dow Jones is still above the Ichimoku cloud in the bull side, so even though it is neutral, it will still be getting the bullish support, will be considered as bullish in some manner, not bearish as is seen in the S&P 500. S&P 500 is more bearish, or is very bearish, similar to the Nasdaq. Okay, but this case is not there in the Dow Jones. Dow Jones is still in the bull side, even though it is neutral, but is still in the bull side. Okay, so considering both of these the cases, that now the S&P 500 is on the weekly chart, what we have seen, that S&P 500 is 60% bullish. On the daily chart, we have seen S&P 500 is 60% bearish. Okay, 60% on the weekly chart means the trend is changing. Okay, there is pressure, and the pressure is real. This 60% bearish movement, the 60% bearish on the daily chart, means this pressure on the weekly chart is real, and the long-term trend is also changing. So overall weakness bearishness or weakness. Okay, whereas in case of the Dow Jones is 80% bullish on the weekly chart and is neutral but bullish on the daily chart. Okay, in this manner Dow Jones is still holding bullishness. It is more bullish as compared to the S&P 500. This means whatever bullish support the entire US stock market is going to get, including the S&P 500 and the Nasdaq, this bullish support will be seen through the Dow Jones. Dow Jones is the only index that is there and is not in the bearish condition or is under bearish or heavy bearish pressure. This is why the Dow Jones will remain in a condition to go bullish, and this bullishness will allow the S&P 500 and Nasdaq to either to go bullish or to hold wherever it is and not to fall heavily. The fall that will be there, this fall will be normal. The only exception that is there in the Dow Jones is that on the weekly chart we have seen that there is a strong moving average. This moving average is forcing or is attracting the Dow Jones towards itself, and because just below the moving average there is the 51,000 psychological mark. Based on this last closing, Dow Jones is heavily susceptible for a fall, 1.5 to 2% fall. So if there comes no good news from the Middle East, okay, during this weekend, or some good or some favorable comments from the president, in that case first the index will fall, the entire US stock market will fall before Wednesday, and then from or after Wednesday the stock market will come into a condition of the revival, means the retrace. Then only there will be the retrace. So now how this means this condition that first half of the week is fall, second half of the week is rise or the retrace. How it will work, what level will define the destiny of the S&P 500, what will happen if the S&P 500 remains within the Ichimoku cloud, and what will be the heavy support zone or heavy support level in the bearish side from where we can expect some good reversal, or if the S&P 500 try to move up, then at most how much it can move up. All of that I am going to discuss in the next part, and the next part is the probable movement section. But guys, before I move on to the next section, the probable movement section, I have this information to share with you that I give these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday. Pre-market analysis, first update, second update, important update, final update every day. And also, I give the opportunities in the premium stocks, up to 100 opportunities in the premium stocks, ETF, index, commodity, etc. to my Patreon community members. And that's not all, because I also give the midweek update. It is a video technical analysis with the precise levels, movement and everything, and it is posted every Wednesday. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates and the opportunities and the midweek update video technical analysis, and they are very well aware of what is happening in the S&P 500 and in the entire US stock market every day from Monday through Friday. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I'm going to discuss the second and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement, means what is expected to happen in the S&P 500 in the week of July 27th. So now, first thing first, the most important part of the next week is Wednesday, 29th of July, Wednesday, the FOMC event. Okay. So again, the Wall Street is now expecting another pause. Okay. But it's not about the pause. It's about the guidance. This means that Monday and Tuesday and the first half of Wednesday, okay, there is no event, no data, and there will be the technical movement. This is why I'm going to divide the entire week into two parts. First part is the Monday and Tuesday. Okay, then comes our first half of Wednesday. Okay, then the second half of Wednesday and Thursday and Friday. Okay, that will be the second half of the week. Now, to add more volatility into this, on Wednesday after market hours, Meta and Microsoft will post the earnings. Now, on Thursday after market hours, Apple and Amazon will post the earnings. Because now it's not just about the 7,404x level, okay, but it's also about two consecutive closings within the Ichimoku cloud. This itself is indicating that there is heavy pressure. Furthermore, there is already the bearish momentum because of bearish MACD and the bearish stochastic RSI. There is already the bearish momentum, right? Furthermore, on the weekly chart of the S&P 500, I have shown you that there is a confirmed bearish crossover in the MACD. This has happened after 4 months. Okay, this means that there is now the long-term change in the S&P 500. Let's discuss the numbers, levels, and the movement. So first of all, we know that on Monday there will be an initial or intraday bearish movement unless there comes some good news from the Middle East during the weekend. Okay, otherwise the bearishness will be there. Why the bearishness will be there? 2 consecutive daily closings within the Ichimoku cloud. Okay, even though the candles are not indicating a gap down open, but 2 consecutive daily closings within the Ichimoku cloud are indicating a gap down open. This is an exception. Okay, and this is where the cloud works beautifully, because if you notice, on 26th of June, the S&P 500 entered into the cloud, retraced from the cloud and closed above the cloud. Then we have seen a bullish rally. Okay, there was not a single closing within the cloud, but now there are 2 consecutive daily closings within the cloud. Okay, now this is indicating a gap down open because of the Ichimoku cloud and because of other technical factors and initial or intraday bearish movement. Okay, now even if there comes a gap down open, or even if there are the bearish factors, then also it won't be a problem because there is a trend line. Okay, this trend line is here and this trend line is created by the 2 lows. And if you notice, now this trend line on Monday, this trend line will be approximately in the 7,308x range. Okay, 7,308x. This means that if the open of the S&P 500 is above the trend line, okay, see, if the open is above the Ichimoku cloud, then that is perfect. That is perfect because this will then change the entire equation. But if the open of the S&P 500 is below the Ichimoku cloud but above the trend line, the trend line level, in that case also S&P 500 will get a chance to sustain and to survive and to revive and to recover. Okay, not the 7,404x level. That is a different thing. Okay, but now for the revival, the boundary of the Ichimoku cloud is the most important part here, because if the S&P 500 fails to recover the boundary of the Ichimoku cloud, okay, then nothing is going to work for the S&P 500, because if there comes one more daily closings within the Ichimoku cloud on Monday, okay, in that case by default there will be heavy pressure and S&P 500 can drop down to the 7,200 range as early as on Tuesday. Okay, why? Because if there is a closing below the Ichimoku cloud, then by default it is bearish and indicating a gap down open. And if this closing is below the trend line, in that case this means a bearish breakout condition, and a bearish breakout means around 2 to 3% fall we can easily anticipate. Okay, but because there are events, because of these events, okay, there will be some fluctuation, there will be some heavy volatility, some bullish support to the Wall Street. Okay, otherwise the bearish breakout will not give even a single chance to the S&P 500 to revive before it can actually come down heavily into the 7,100 or into the 7,000 range itself. Okay, this is why the movement on Monday will be very, very important and will be very, very critical, because there are multiple factors that are going to affect, okay, and to work. So the first one is the boundary of the Ichimoku cloud, which is around 7420 or 7418, somewhere around that. Okay, the boundary of the Ichimoku of the trend line level, that is in the 738x, around 7386 or 7389. Okay, somewhere there. So this small zone, okay, this is going to define the bearish and the bullish future of the S&P 500, means whether the S&P 500 will be able to sustain and survive by the time help arrives. Okay, and the help will arrive on Wednesday, especially after market hours, means Thursday and Friday. Okay, one more thing I forgot to mention, that on Thursday morning the inflation data will be released, the PCE data, but that data will not be considered because on Wednesday the FOMC event is there, and FOMC event will then shadow, okay, all of the data. This is why before Wednesday, before 2 p.m. Eastern time on Wednesday, there is no help. Okay, the Middle East is an exception, and the comments from the president, those are the exceptions. Okay, otherwise nothing. One more thing, if you notice here, this is the oil. Okay, after 2 months, oil regained the $100 mark. The closing on Thursday was at 100.511. Okay, the closing on Friday was below 100 at 98.106. Right now, it has regained. If the oil moves up and sustains above the $100 psychological mark, in that case, the entire US stock market will, by default, it will be under pressure. Okay, then only the manipulation can help. Otherwise, nothing will be able to help. Okay, but irrespective of manipulation, irrespective of data, earnings, okay, or anything, these two, okay, this is small boundary, this is small zone, let's say from 7,380 to the 7,420, 7380 to 7420, this 40 points, this 40 point zone is what will define the bearish and bullish future of the S&P 500 in the coming week. Now, the bearish side is more open as compared to the bullish side. Why? Because even if the S&P 500 manages to recover the boundary of the Ichimoku cloud, which is in the 741x or 7420, okay, it has managed to recover. Then comes the next very big challenge, and that challenge is the 7404x level. This 7404x level is so strong that on last 2 days, on Thursday and Friday, I have repeatedly mentioned that now the bullish side will be limited and restricted to the 7404x. Any movement above 7404x is not sustainable. S&P 500 will remain below 7404x. This means that even if the boundary of the Ichimoku cloud is recovered, S&P 500 will heavily struggle at the 7404x level. This is why now we need 4 consecutive hourly closings above the 7404x level, so that we can consider and it can be confirmed that S&P 500 has actually regained and has recovered the 7404x level and is in a condition to move up. Now, one more thing, very important thing. You are seeing these are two moving averages, red and green. Okay, earlier we have seen the same, that these two moving averages were very close. Okay, on Friday 26th of June. Then there was very heavy bullish movement on Monday. Okay, and here I have suspected and I mentioned to my Patreon community members the formation of the bullish slip. And because the bullish slip is forming, this means that now the S&P 500 will sharply recover from the 7,400 to the 7,500, and it did within 1 day. This is why Monday is again more important, because if on Monday there comes a good bullish candle, somehow S&P 500 manages to disallow this bearish crossover in the moving averages, in that case there will be some chances that on Tuesday, either through manipulation or something like that, the S&P 500, if it goes good bullish on Tuesday, then it will form a bullish slip. What? A bullish slip. And if the bullish slip forms, then there will be strong recovery, and by default through technicals S&P 500 will be back into the 7,500 range, and then only the S&P 500 will be needing the favorable earnings, okay, on Wednesday after market hours from Meta and Microsoft, Thursday after market hours Apple and Amazon, and some positive comments from the Fed chairman, so that the new all-time high comes back into the picture. Okay, otherwise it will not be, right? So Monday in my first update, okay, and then in the midday update I will mention if there are any chances for the revival or not, or if the bullish slip is forming or not. Okay, and accordingly you can make changes to your trades, because once there comes a confirmation, like if there comes a bearish candle, a red candle on Monday, in that case there will be a confirmed bearish crossover in the moving averages. This will be happening after like you can say April. Okay, again this is the same, after 4 months this will be happening. Okay, and once that happens, this means that confirmed the trend has changed. And now even if there comes a favorable earnings, okay, then also that will not be able to make much change, or will not be able to provide much support to the S&P 500. What that will do, that will simply give you, like, if there comes favorable earnings when the trend actually has changed, then those favorable earnings will give a bullish push. will form a lower high, means an opportunity to sell, opportunity to short, or to go bearish. Okay, remember this point. But if it is already bullish earnings, in that case possible new all-time high, otherwise not. Okay, so Monday will be very important because a lot of things are going to happen on Monday. Okay, now if the movement is already below the 7404x, okay, in that case there is no point of discussion the crossover in the moving averages or the all-time high level, because by default then there would be the crossover. Yes, if the S&P 500 is struggling at the 7404x level and somehow these two moving averages do not cross but are at very just 1 point apart, just 1 point apart, okay, or even a few cents apart, but S&P 500 is holding on Monday, okay, around 7404x level, okay, then on Tuesday somehow, let's say manipulation or somehow, the S&P 500 moves up, okay, and there is a very heavy bullish movement, like more than 1% or 1.5%, and S&P 500 has entered into the 7500 range. Okay, well, without manipulation that will not be possible, but let's say if through manipulation this happens, in that case what will happen? In that case, this 1 point or few cents of difference in these two moving averages will force the moving averages to form a bullish slip, something like what we have seen here, okay, back in the last week of June. Exactly that, okay, that thing. But if there comes no help by Tuesday, in that case confirmed bearish crossover in the moving averages, in that case it will remain bearish. It will be the bearish movement, that's it, nothing else. And what will happen if the S&P 500 moves up, okay, enters into the 7500? Will it be able to move heavily or deeply into the 7500? No, it will not be able to do that. And why the S&P 500 will not be able to do that? Because the 751x zone is so heavy that it will stop the bullish movement. Now, even if we consider the best case scenario, okay, then also reaching to the all-time high is not possible. Why that is not possible? Again, the same reason. The reason is that there are multiple trend lines here in the S&P 500, and then my level at 756x. Okay, this level combining with these the trend lines, okay, it is creating a heavy resistance zone. This zone will not let the S&P 500 pass through and to make a new all-time high level. This is why I am saying that all of those factors, comments from the president, ceasefire, favorable earnings, and comments from the Fed chairman, favorable comments from the Fed chairman, all of these must be in sync. Then only there will be heavy bullish force that can breach and that can move beyond all of this, or the strong resistance zone to form a new all-time high. Otherwise, a new all-time high is not possible as such. So this was in the bull side. Okay, the first factor is the 7404x level. Okay, then comes the 7500 psychological mark. In between these two there comes a small zone, okay, that is again a very heavy zone. Okay, then in the 7500, the 751x zone. After that, the zone created by the trend lines and my level. Okay, now comes the bearish side. Yes guys, but before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you want to get the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. And I have given the link in the description of the video and also in the comment section. And also guys, remember, along with these, the daily precise updates, I also gave up to 100 opportunities in the premium stocks and the ETFs and the index, etc. Now the bearish side. Okay, so there is a lot of struggle in the bull side because of these the factors. But what about this the bearish side? Okay, well, bearish side is like empty. You can clearly see this the empty space in the bearish side. There is nothing that can actually help the S&P 500 in the bearish side other than the standard support levels. What are these standard support levels? So first and foremost, the 736x levels, the 7306x level. This, when combined with this, the trend line level is creating a very strong support. This is why S&P 500 for now will get a strong support here. Okay, when the S&P 500 loses the 7306x level, then it will enter into the bearish breakout condition. Okay, in the bearish breakout condition, there will be heavy fall, continuous fall, gap down open. Even though we are expecting what? We are expecting an oversold condition, but still the bearish breakout will force the S&P 500 to remain in the oversold condition for a day or for 2 days. This oversold condition is seen in the weekly chart of the S&P 500. Well, that is very surprising that in the weekly chart this kind of oversold condition is seen. This is not happening now. S&P 500 is not in the oversold condition as of now. It will be in the next week, next to next week. That will be the first week of August. Okay, then only the S&P 500 will hit the oversold condition. Okay, this means that coming week, the week of July 27, the S&P 500 can come down heavily, bearish breakout condition, fall and fall. Only the lower level charts will hit the oversold condition, extreme oversold condition, and then momentarily there will be some relief. Okay, otherwise not. So this means that the bearish side, that once the support of the 7306X level is gone and there comes the bearish breakout condition, then immediately there will be some the next support is at 7302X level. But it is not this level, because there is one because see there is a method that I use to calculate the buy and the sell zones, or these the buy and the sell levels, and through that method I give these the opportunities. Now I have given the opportunity in the SPY. SPY is the ETF of the S&P 500. This was first opportunity. I have given 3 opportunities: first opportunity, second opportunity, third opportunity. Third opportunity means when the S&P 500 is coming down to the trend line level, okay, then this is the first opportunity. Below the trend line level, then there is one more opportunity. Okay, below that there comes the third opportunity, and this is what I am mentioning here, that once the S&P 500 loses the 7306X level, it comes into the bearish breakout condition. The first opportunity is invalid. Then immediately comes the second opportunity. This second opportunity is in between 7306X and the 7302X level. Okay, and because S&P 500 follow the standard rule, okay, these my calculation, these my methods, this is why there will be a bullish retrace even if there comes the loss, even if there is a loss of the 7306X level, then also there will be that the reversal because of the second opportunity. Okay, then on that day, second day and the third day, if the S&P 500 remains bearish, okay, within the 7300 range, then comes the third opportunity. The third opportunity is actually the combination of the 7200, not the combination, but is in the 7200 range. But remember, when the S&P 500 enters into the 7200 range, that time any reversal, see, when I say opportunity, and I am saying that buy, that there is the buy price or there is buy opportunity in the S&P 500. This is the zone, these are the marks. Okay, so now when you calculate from that mark, then S&P 500 goes around 1%. For example, if you notice here, okay, what I mentioned on this day, on Thursday, buy opportunity here, okay, at the trend line, means my level 73, this is the 736X and the trend line, and that day the trend line level was 7376. Okay, with my level it was creating a strong cushion, strong support zone. So if you calculate the buy opportunity from here to the high of this candle, then this is 1%. Anyways, so what I'm trying to say here is that when the S&P 500 comes down and the S&P 500 has come down to the 7200, then the reversal in the S&P 500 will be to the 72 or around the 7302X or 3X. Okay, and in the best case scenario, that will be to the trend line and to my level. Okay, in that case, the bullish side will be out of the picture, but the maximum reversal will be up to this, and then there will be the fall. Okay, this also means that S&P 500 will follow the standard movement, standard and the natural movement. What is the standard and this the natural movement? Okay, this is like a staircase pattern. Okay, a staircase pattern. Secondly, whenever there comes a bearish breakout from the trend line, then what happens? In that case, after getting the bearish breakout, there is a fall, fall, fall. Then there must come a reversal back to the trend line someday. Okay, and then only after testing the trend line, it should continue its the bearish movement to confirm that now it has tested and it has failed and it is coming down. Then this will form the lower high. Okay, this will happen at the second opportunity, means as long as the fall is within the 7,300 range. Okay, that I have mentioned, and I will mention these opportunities again on Monday. Okay, Monday and Tuesday, as long as the movement is very near to these the buy levels or these okay, or these. And also remember on Friday also I've given the same in the QQQ, okay, and the Nasdaq. So this means that the second opportunity in the S&P 500 and the corresponding opportunity in the QQQ and Nasdaq are expected. If there comes a bearish movement, then we are going to see both of these at the same time on Monday itself. Then either on Monday there will be an intraday bullish retrace, or on Tuesday there will be a by default that the bullish movement. Why? Not because of the technicals also, but because of the method through which the S&P 500 is or will be compelled to go bullish. Okay. This means that the bearish side is allowed, and the bearish side will happen, but there will be no heavy or sharp, this kind of heavy or this the fall. Okay, even if there comes heavy fall, the next day there will be heavy bullish reversal. Why? Because S&P 500 will have to follow the standard protocol to get the reversal. Okay, as per my the mathematical the formula or this the method. Okay, so there is no standard support, but these the buy levels will create the buy opportunity, and then here the lower high and the sell. Once the S&P 500 enters into the 7,200, or if the S&P 500 has failed to sustain, okay, or sorry, fail to recover the trend line when it retraces back to test the trend line. Okay, in that case S&P 500 will come down, and then there is some support in the 7,200, 725x. Okay, the zone is created by 723x and 725x. Okay, this zone will hold the fall, will give some reversal, then there will be the fall. But eventually, okay, where the S&P 500 will be heading to? S&P 500 will be heading to the 7,000 psychological mark, which we have not seen since April, and it's been like 4 months. Okay, so eventually S&P 500 will be heading to the 7,000. What can stop this to happen? A bullish slip, or these 3 or 4 non-technical factors. Okay, ceasefire in the Middle East, comments from the president, favorable comments from the president, favorable comments from the Fed chairman, and then the earnings of the favorable earnings from the tech giants. All of that in sync, okay, will be able to help the S&P 500 to get a bullish reversal, to disallow the movement to the 7,000. Only the movement will happen in the 7,300 range only. Okay, and then there will be the reversal. A little dip to 7,200 is possible, not a problem. There will be the third buy opportunity, it will reverse. That's not a problem at all. Okay, in this method, so this is how the S&P 500 will move. Okay, here, but again we must not forget that Dow Jones is already under pressure on the weekly chart. A moving average is attracting the Dow Jones, and that is around 1.5 or 2%. Okay, demanding 1.5 or 2% fall in the Dow Jones. If there comes 1.5 or 2% fall in the Dow Jones, then S&P 500 will have to come down to enter into the 7,200. Okay, with some chances of the 7,100. Okay, well, this will be very clear on Monday and Tuesday. I will mention in the in all of these the updates: pre-market analysis, first update, midday update, okay, final update, and also through the opportunities. Okay, you will get to know, okay, whether we are expecting a sharp bullish reversal or not. So guys, I hope this is clear. So guys, hit like if you have liked this video in order to appreciate, and also please hit the hype button on YouTube if you have liked this video. And guys, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you want to get the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have any questions or if you have any suggestions, then please use the comment section to ask your questions, okay, or to share your suggestions.